Hello everyone, welcome. I haven't done an update in a couple days, so let's get through looking at what past performance recommendations or at least algo optimizer settings looked at, and let's take a look at a few other markets that I just tweeted out about a potential setup here in CELG. So first and foremost, we have several different markets, and I know we've had a lot of people ask for looking at the results of a market and looking for back test studies, whether it's the whole thing about the person algo optimizer is that it allows individuals to find out factually whether or not the holding period should be 8 bars on 5 minute, 20 bars. What's the best type of range to see a potential risk reward met? Or should there be a trailing stop function? At what percent level should we start trailing that stop? What's your max risk, your max loss that is an emergency exit function? There's all different ways that we look to optimize to build a system, but at the end of the day, it is each and every one of our responsibilities as a retail trader and an institutional trader. And a lot of you professional traders that do follow me will be laughing because you know that no one just turns on a system and leaves for the golf course. That's why Monday through Friday golf courses, for the most part, except for retirees, are pretty empty. Most traders, even algo optimized, whether it is quantitative analysts, they're all sitting in front of the machines making sure the machines are still working and they're still on and you're connected to your server. So a lot of your professional traders, I don't want to stereotype and give the MO. We're sitting here in like regular t-shirts with sweaters and watching the markets in our blue jeans and sneakers, wearing comfortable clothes, because that's pretty much the MO of a trader, right? We're comfort now, and we're making sure what we programmed in the machine gets done and executed. There is a function that when, for example, we don't like a trade, and here we have a setting, format strategies. If we go up here to format strategies, first thing we can do is generate orders to display in the trade manager strategy tab order, and you can auto execute. And you can turn that on and then account with confirmation. And if you turn that on, now if you hit this and you go, I agree, which I've turned the system right now, whether it's on or off, isn't going to take a trade. It's after it's trade hours, so to speak, so in the settings that I have for the Mini Dow contract. Anyway, if a trade pops up, I can then take a look and say, hey, do I like that trade, in the sense of I can look at indicators, I could look at the time of day, and I can say, yeah, go ahead, execute that order. A little box will pop up. So that's one way that you can do it. If you don't like the trade, you turn the system off and then just don't generate any strategy tabs. So we have functional ability to take trades or not take trades in the marketplace. So let me show you a couple settings here real quick. All right, so if we look here at the strategy performance, you can go right up here and hit strategy performance report on TradeStation. One way to look at it. First and foremost, first you can clearly see this is only a month and a half, 6 weeks of trades. And this thing only trades between 2:30, capturing maybe the European session, and stops trading at 15:30, and aka 3:30. This is also, if you notice here, right here, that says 2:30. Well, this is in, again, that's 2:30 market time, which is exchange time. The Dow's traded in Chicago. This is set at Eastern time, not exchange time. So, I mean, 10 to 1 or the other, we can always change those time settings back. But like I was posting or mentioning a few minutes ago, you can choose the time, and one of the things that we can start to trade or slice it up, saying I only want to trade from the European session to 6 a.m. and I only want to trade maybe the last hour, or what seems to be more important, the lunch hour. No one used to trade in the lunch hour. Now it seems a lot of big moves happen at the lunch hour. Define big moves. This is the lunch hour right here. So we get big moves that occur in the lunch hour, it seems, more times than not. But be that as it may, This is just a small sampling. A lot of people say, hey, I'd like to see a 5-minute backtest study on a 5-minute chart, or a 3-year backtest study on a 5-minute chart, so I can capture the different market elements. Well, I mean, this is pretty much on a 5-minute chart. You're looking at capturing a different element of a market. This is a downtrend, an uptrend, and I mean, that's pretty much choppy type of market activity on a 5-minute basis. If we go back and look at the performance summary, and let's review that real quick. Simply go over here to performance summary tab, just click on that. Profit factor, I mean, we can always make this better by working a little harder at the strategy, whether or not we are scaling out, I mean, this is kind of amazing how it gets short and gets out. It trailed to stop. It lists exactly why it gets out of certain trades. Obviously, the market, it trailed to stop and got out of that long. It's pretty wild how that all works out. But needless to say, the profit factor, long, shorts, this is taken, as you can see here, 916 total trades. That's a huge sampling in 6 weeks. So can you imagine if this is 916 trades that's generated a gross profit of $45,000? Obviously, you got commissions factored in there. The percent profitable, some people like this factor. 78% of the trades are profitable. That means we have lots of trades, small winners. Obviously, we have more winners than losers, and I mean, that's what a 5-minute system is designed to do. Just capture intra-bar volatility, get you in, get you out. Higher degree time frames may take a trend. So if someone's asking for a backtest study for 5 years, the rule of thumb for any trader that I've noted, that at least from my 38 years experience in trading, and I've written several books on trading systems. In fact, one we put together using a phenomenal product, Genesis Trade Navigator. We did a study on a euro currency system, DEFCON 3 we had, and it was a wonderful trading system for the time when the euro currency had an excessive volatility, trading over $1.40 or 140 pips per day in the FX arena. When the euro currency was trading at $1.50, it was an awesome market vehicle and signals to trade, using the same type of sequence and setups that we use here for whether it's the crude oil or whether it's the Mini Dow contract. The difference is that things changed since 2005 when I put out that book called Candlesticks and Pivot Point Trading Triggers. It was really an in-depth study that talked about trading systems and how to utilize system analysis to aid you in determining the best portion of your trade, what your holding periods are, what the best time of day to trade is, etc., etc. The person Algo Optimizer put in all of these functions for us to find out whether or not the best time of trade is U.S. session or European session. Here's a funny situation that I'm not sure we covered in other videos, but crude oil, if we go and change this real quick over here and look at crude oil, well, let's go over here. We haven't filled the data in on that page. Let's go over to just type in @CL. One of the things that we discovered, as you will look here, crude oil from approximately the end of January, right? End of January, there it is. Crude oil prices have gone up, and it looks dynamic. The indicators here, we had some pretty strong volume. The momentum of the volume is kind of drying up, by the way. The momentum of the price action is drying up a little bit, and the relative strength versus the overall market, S&Ps, is starting to decline, giving me a little insight that I would probably not want to be buying crude oil. Anyway, that's neither here nor there. What I'm trying to share with you is that if you notice here, you would say, hey, I bet a long-only trading system would have worked better in this environment. And the fact is, if you take a look at from the point of buy signal to the point of sell signal, you had more time periods. 2 bars. Look at this. 2 bars up. You had the bulk of the rally on that leg, 4 bars. You had the bulk of this rally, again, another 4 bars. 1, 2, 3, 4 bars. And all the other time periods was down to down. It spend more time going down and less time going up. And I don't know if anyone's recognized that, but here's the point I'm trying to make. A trading system did better taking shorts on a time frame of U.S. open outcry sessions, because we've been seeing happen is the market has been trading up in the European session and getting overbought in the day session, and sellers come in the U.S. session. And if you have a trading system that only takes day trades during the U.S. open outcry session, you've been making more money on the short side in that time frame. And that's information you're not going to get by looking at this chart. So that's first and foremost a powerful education lesson for anyone watching this video. What the market seems to look like sometimes is not necessarily the impression that we get as traders. It's certainly not showing up in the P&L. So let's go back and look at that one more time in the crude oil system. All right, so here's a 5-minute base model of crude oil. Now we've rolled out of June and in taking July, and this is another tricky market for another day of explanation, or which is what we teach our traders. This is a market that rolls over consistently, has a contango issue, meaning the futures in a normalized market cost more, and right now July is about 9 cents greater in value than June prices. And again, this is Thursday the 17th of May. So as we get to rollover, you start to see the volume splice between the June and the July, and even traders are going out to August and even down the futures time scale into December. But the bulk of trading systems and traders are in the June and July time frame. So here's what I wanted to point out, that it's currently in a long position. It has not gotten out. It's just trailing a stop. So the price fluctuation is going up and down a little bit. So what I wanted to share with you about that whole concept about when should you be trading and what does the system do for you. So let's take a quick look at the performance summary here, and just to share with you a couple things. So in the settings, this is the system that starts to trade in the 2:45 session, 2:45 a.m. Eastern Standard Time, so it makes the European Open, and it stops trading. It won't take any trades after 15:30, which military time stands for 3:30 Eastern Standard Time. If it's in a trade, it will not exit at the end of the day until, and that gives us our Globex risk of 5 to 6 p.m. Just keep that in mind. There's that window. If this is 5 p.m. and that's 6 p.m., you can either override that or not. In 2017 and 2018, there were two incidences. One was Rocket Man. If you remember, Kim Jong sent a rocket over Japan's waist and over the airwaves there, and the market had a huge and it was announced at around 5:30 when we had that 1 hour slice of time of market closure. What else impacts markets during those market closures? And that was an unusual anomaly, and the markets reacted pretty, I would have to say, we gapped open a ton as there was, that threat, that high tension of war was going to happen, and the S&Ps actually plunged about 14 points in that time period. It all, of course, recovered. But just to give a lesson, there is risk in the market at any time, but when a market's closed, we have that you're never not in risk. But this particular system does not get out of a trade unless you manually exit the trade before the close, and you always get back in a trade. But this system does not get out on the close. Again, that option is there for individuals that we've programmed into this particular scenario. So I'm just going to change something for you right now. You can see the performance 13,440, and we're going to change the settings real quick here. And I'm going to say, you know what, let's only trade U.S. open outcry session and see what happens. So we're going to format strategy. We're using the Person Algo system, the original one, not version 16. We're going to format this, and I'm going to change this time period to 6 in the morning, 6 a.m. We are using position calculated method in this particular product. We give our traders a chance to have 3 different types of position calculation method. We use the standard Number 3 for futures, which gives us a stagnant position size of only 2 lots. And then there's, as you can see where the graph is, the sliding graph here, there's a lot more behind the scenes that functionalities to go with it. But I'm only going to change one variable, the start time. So we're going to eliminate the European session and start at 6 a.m. I want you to focus in as it programs in its test. Look at what the strategy equity performance did. We just increased profitability trading this thing in 2 lots. And again, the time frame that we were going back on this study is, again, since the beginning of the year, just trading 2 lots is up to 18,000. Again, this is just a base model. This isn't the big kahuna system. But I just wanted to put out to you guys what the overall trade difference is between your trading hours. And maybe people might not understand that if you say, I want a backtest study on a 5-minute system, well, what are you asking for? 24 hours? Because this is a 24-hour market. Are you asking to only trade between 9 in the morning and 12 in the morning? So the question isn't, let me see what the backtest study is. The better question is, let me see what the backtest study is for X period of time. And that's what the algo optimizer does. It helps us to determine the slice of time we should be trading in this environment, amongst other factors. So that's basically it in a nutshell of what we can look for and what maybe we could see out of a market. But more importantly, anyone that's expecting to have an algo optimizer to just turn on and go to work and let it, or play golf or sit at the club for a while and let it just generate profits, you don't have the right idea what algo trading is. And that's the part of key education that we want to help deliver to everybody, key education. And you know, if you're an end-of-day trader or you're trading another product like an ETN or an over-the-counter product that you can take the signals off of, like Bitcoin. This is the GBTC. We've put this out I don't know how many times, and it's kind of a cool way of trading Bitcoin in of itself, or at least tracking Bitcoin's performance and maybe trading the signals here and using against maybe the CBO's futures, the Chicago Board of Options Exchange, or the CME futures, or Bitcoin itself. It seems that when it gets long and gets out of a trade, it generally gets out close to its again, this was a trailing stop. It got out of the high of that time period. I mean, the market did nothing. Of course, it generated a new buy and got you right back in on that leg. As you can see, it got long and had a slight profit, and then it said, no, it's no good. Get the heck out of Dodge quick. Went short, got out. You can clearly see the equity curve is growing. Not that every trade is the best, but boy, I'll tell you what, more times than not, whatever we've programmed here seems to get out, not at the absolute low, but right before the low of a move. So we've actually tapped in to some pretty decent situations, and then the key reversals of watching this on a 60-minute basis, which is another foundation of our system, is looking at the VIX product and the VXX. And the VXX has just been a dynamic trade product, and on the Person Algo Optimizer, which we've given everybody an ELD file, which means you get these settings when you purchase this product. And again, this is a product that you're not leasing. This is not a product that you're paying us to only have limitations of what you can trade. You can help define and devise your own strategies, your own systems, your own signals on any market in any time frame. That's the dynamics of what the Person Algo Optimizer. I don't know if that's something that is the most powerful statement ever. If you rent a system or rent signals and you get signals sent to you, it's generally sometimes a lease fee of anywhere from $150 to $600 a month. But you're only allowed to trade 1 or 2 or so many contracts or shares per that lease that you're paying per month. So if you pay for a system of $300, you might be only able to trade 1 contract of gold or 1 E-mini S&P or something of that nature. And you have to per trade, the brokerage, some brokerage firms will manage how many positions you're in for your lease subscription or your trade signals that get sent to you. It's a whole entire different ball of wax business. This is something that you pay once, you get upgrades, you get training, and I think that's the key, is that you can now say, you know what, I'm going to take these signals and I'm going to be filtering them out a little bit, or maybe utilize the signals and say, okay, I don't want to trade the VIX, but maybe I'll buy puts when I get a sell signal, or sell a call premium and look for some theta decay. That's another aspect that you can apply these signals. When you take a look at the overall performance, which I know on the VXX we've given out multiple times, but just to make sure we're all on the same page here, here is the VIX performance. As you can see, we are trading on a $100,000 notional account, so it's position calc method 1. It pretty much says, per $100,000, get me in as many shares as possible in a trade against that $100,000. So if you had a $250,000 account, you were only devoting less than 50% of your account to this product. So when you look at the performance graphs and you go, well, it's, in this case we're already off the charts, and you can see that this is a performance graph dating back since the beginning of inception, or the beginning of 2010. This thing started in 2009, and the Barclays put this out in the VXX product in 2009. It really started to get some better volume traction in 2010, and this is the performance of history over that period of time. So on a $100,000 account, it's done. Well, it's pretty amazing. Let's just leave it at that, right? I mean, I think everyone can understand and look at this product. It does better in short trades than long trades, obviously, because it's a volatility product. The Sharpe ratio here near 50, not bad performance right there. Its return on account is incredible. So everything that you look on this, including even the drawdown factor on a $100,000 account, livable. Obviously, we'd like to see that a little bit better, but it does provide a really good rate of return, and that's why we like this particular product as well, and that's why we stand by the Algo Optimizer to give this out with the settings for our clients, and to make sure that they get the proper training, rather than, hey, I'm going to get this, but I want backtest studies before I do. In backtest studies, and that's great, and that's why we do provide information videos out for you guys to look at these things. But I would have to tell you, when you look at the VXX, or whether it's crude oil or Apple or Bitcoin or whatever product, I mean, you got to make sure that a market has volatility in it, and it has on the Apple trade model. There's going to be periods of consolidation, and a consolidation, whether you're long a stock only or looking for signals, you're going to take some buy signals that are pretty good, and you're going to want to take some sell signals which were dynamic, and then buy signals that, I mean, this is just an insane period of volatility. It's gone and done some really amazing things. And current position right now in Apple, by the way, is flat in the system, and we're waiting to see if we get notice we had a PPS sell signal up here, but the system is not short yet. And we're waiting to see what it does and if it generates a short trade. I put out a situation, by the way, and just to share with you, we don't have a trading system automatically calculated for each individual stock. So when you get a tweet of mine and it says, for example, I'm looking for a buy signal in Regeneron, we don't have an algo system per se on Regeneron. I don't have an algo system per se on what I just sent out, which was CELG, CELG, in the biotech space. What I am looking at is just a discretionary indicator scenario, and looking for a market to give us a bounce off of when I sent that tweet, and I said I would do a video update. And I just wanted to make sure everyone understands that tweet on CELG was not an algo optimized generated buy signal. What it is just something that alerts us, that I wanted to send everyone, that we had a major important monthly, that's a Persons Pivot monthly support target on CELG. We have an option expiration pivot support target. Option expiration, something that we developed with Genesis as well as Thinkorswim. Trade Navigator has that function, as Thinkorswim does as well for you TOS users, and as well as the weekly. And so when I look at CELG, I would say that it has not, the relative strength versus the overall market just is no very good. It's muy mal. This is the person market catcher. This is a relative strength indicator. You could see that it started to underperform and lag the broader market. It started to be negative. But as I get near support, I also want to say, well, what's my momentum? And that's the closing bell. What's the momentum of the market? And the momentum of this downdraft is starting to weaken a bit. We might have what's called, what we would consider a Arthur Merrill W11 bottom, which means the number 2 point takes out the number 1 point, and then we see sometimes a rocket to the upside. Other people would call that a dump before the pump. Market goes down, gives some people false hope to get long. They go down, they get their stop taken out, and then the market goes up without them. Typically, on the situation like that, we would want to see bullish convergence patterns in volume, and this is on balance volume. But my momentum volume indicator here, which is in terms of percent change, and this is part of the person's VIP lifetime package, incidentally, we're starting to see the momentum of the negative movement dry up, A. B, the momentum of the volume is starting to shrivel as it declines against longer-term, higher-degree support. I'm not saying CELG is the biggest investment since sliced bread and it's going to go up forever. I am looking for a tradable bounce. This is the quarterly pivot. By the way, we are at quarterly S1, Persons Pivot, quarterly S1, and against an old-time low that we haven't seen since way back here. And I think that's something for CELG that needs to be respected, that we've come all the way back down from the point of where it launched to the upside. So the actual volume action longer term looks like it may be supportive of a dead cat bounce here, and a tradable low, which means you buy it, and we're looking for maybe a market to only get back up to maybe from 79 and change. Possibly it gets back up into the 86 to 90 handle, before month's end or into mid-June. So that's why I put that tweet out there for you guys to understand what was I referencing as far as CELG was concerned. So again, here's CELG, and this, as you can see, is the weekly pivot. So we shared the quarterly pivot, the monthly pivot analysis, and here's the weekly pivot. So when I say confluence, it's a multitude of time frames that don't have, the weekly pivots have nothing to do with a quarterly pivot, right? Unless the high and the low, if you understand pivot analysis, the high and low and close is all synonymous, and that's where you extract the data from to get the pivot points to begin with. High, low, close divided by 3. And then we figure out other calculations for the resistance and the support targets. But as it is, we did get a 60-minute little short-term buy signal. You can clearly see that the volume action is not great. It made newer lows, but the momentum is starting to dry up. So this is telling me that we're coming to, perhaps this was a low, an interim low that just took out the stops, and then we could see maybe the market come back up and join its typical value over the last 3 months, which belongs somewhere between 88 and 90. Anyway, I hope you enjoyed the video and the explanation and further details about the importance of what an algo optimizer can do for an individual trader, the power behind helping you understand the best time to trade, the best type of profits to take in that particular environment, and as well as let you know you just don't turn something on and walk away. You want to make sure that the machine's working, you're connected to your server, and that you're monitoring the trade. So it's not for someone that has a full-time job and they can't monitor and they think they're going to turn on 20 markets and have them all run for them. That's great if you have unlimited resources to have full margin requirement per contract, A. Be willing to hold positions into that 5-6 o'clock per night session, B, and then C, maybe pay someone to watch the computers for you. With that said, I hope this did help you, and until next time, I hope you enjoyed this video. Thank you.